Hi there, it's Evan here from the Trade Risk on Monday, March 20th. We're intraday right now, and we're going to be reviewing stocks that you submitted, tickers that you asked to be reviewed. I got 8 names that I'm going to run through. Should be about a 10-minute video. And again, these prices were intraday right now here on Monday morning, Monday afternoon, depending on where you are located. As a reminder, I am hosting a webinar tomorrow. It is completely free, new material. Make sure you're signed up for that. That's 1 p.m. Eastern. TradeRisk.com. You can find the link or click the link that is appearing on market regime filters, classifying the market. Some pretty cool stuff that we're going to be covering tomorrow, 1 p.m. Eastern. Basically, we'd be wrapping up just around this time tomorrow. So if you can make it, would love to have you there. If you can't, drop your name and email, and I will send you that recording. So with that, let's get into some of these tickers that you guys submitted. First is AMGN. So AMGN, this is one that was recently added to my watch list, actually on Friday with this drop, this gap lower that we saw. Something that sort of piqued my interest here. So let's look at this on a monthly chart first. And anytime you see this pink line here, this pink horizontal line, that's generally a monthly level that I'm at least paying attention to. And it's, again, it's approximation. It's not meant to be an exact level. But you can see here on a monthly chart of AMGN, you can see that we've been going sideways since the start of 2015, the end of 2014. So we have a nice sideways base amongst or within a long-term uptrend. If we go back to the daily chart, you can see we just had this big gap down on Friday. So really, it's at an interesting spot here. If you're interested in the name, it's going to allow you to get in here at a little bit of a cheaper price. So really what we want to see now, if you're really tactical, I think the highs here from Friday could be a little bit of a trigger entry there if you want to try and play for a gap fill and then potentially hold for a bigger move. Or we could, and again, this is, I know, a wishy-washy answer here, but we could come back down and fill this gap before we want to resume higher, or just mess around in general. So it's at an interesting spot. It's a spot to pay attention and just observe and sit on your hands. I like this name. I want to be involved in this name, but I don't want to jump in just yet. Maybe a trigger above here would get me to start a position, but ultimately back to that monthly chart, or you could use a weekly chart or long-term daily chart. Really just want to get back above 175. I think if we can fill this gap and hold and start to move higher here, that is ultimately what I would like to see for long-term continuation, long-term trend in a nice, healthy, bullish structured stock on those larger time frames. So I like it. I'd be a little just cautious here. Maybe we need to come back in and fill this gap, or maybe this is just a good opportunity that we're going to end up just kind of moving higher, filling this, and then go off to the races. We'll have to see, but it's something worth paying attention to. That's a great name to have on the list. Next is Amazon. So Amazon, again, we'll start with the monthly chart. You can see clearly just been running away higher here, exploding with growth and acceleration higher in the stock price. If we go down to the weekly time frame, the one thing I would point out here is look how sideways, look how kind of the energy and the momentum has just been pulled out of Amazon up here above 840, so above the October highs of 2016, but it's been sort of reluctant and unwilling to sort of move higher in a fast, quick kind of trend-like formation. So if you go down to the daily chart, you have now a more refined range, and that's what we're doing here. We're just looking at tighter and tighter time frames, shorter time frames to refine those trading decisions, refine the levels. You got roughly this 840 level, and you got the highs here at 860. Now we could close at all-time highs today. That would be bullish on Amazon. That would trigger new long. It would be a new all-time closing high, likely to stir in some interest there and potentially get the ball rolling here back on the upside. The worry on the weekly time frame is how just kind of lackluster this has been here. If this turns into sort of a rollover top, that's a risk. Again, don't know this at, we can't really predict this ahead of time, but it's something to be aware of. If we started to convincingly lose 840, then you have a potential that maybe we're about to roll over here in Amazon. But again, a massive, a long time leader like this, anytime there's, perceived real weakness or danger, the magic bid tends to appear and we move higher. So don't fight the trend, but be aware of risks. You have clear levels, 840, trigger of new all-time highs. I think those are both pretty good entry points that are pretty, that are pretty risk adjusted. Google, a little bit more pep here, right? On the monthly chart, you can see very kind of consistent uptrend, basing, breaking out. Weekly chart, kind of the same picture, a little bit more of some more momentum and continuous trend than in Amazon. We got a little bit of a pullback today. Doesn't mean a whole lot to me. We're right near all-time highs. I think dip buyers are still interested in this. Great volume pattern. So it looks good to me. It's always tough to chase these things, or it's always tough to figure out exactly the best spot to buy here, just because it's been moving higher in such a grind-like fashion. So, from my experience in these names, you have to just start to pull the trigger when you start to get multi-day dips, or you're going to miss everything, or you're going to just be stuck there looking for that perfect entry. So Google, I have no position in it, but as it dips down here, it looks good. Maybe a retest down to 860. See how it acts from there. A lot of different ways, but bullish on pretty much all time frames. So I like it. IWM. Now, this is one that, so this is Russell 2000 small cap index here. Something I've been paying close attention to. I've written about it. I'll probably repost the message or post that I put up on Friday. But this is where I'm paying attention to. I think this is a pretty key market right now, particularly to figure out the next sort of multi-week direction here as a whole, and as a kind of a stock market proxy. The IWM, the Russell, has been lagging. We know that year to date, but it hasn't been doing a whole lot wrong. It's been consolidating. That's really what we can chalk all this up to, is consolidation between 134 and mostly 138. We had this breakout in here up to 140. It failed, came back into the range, and now we're back up to 138. So it's at an inflection point. I consider this the inflection area. We're either going to fail, or we're going to, obviously continue higher. I think as a very clean, simple way to view this, above 138, and I'm more neutral to bullish on the Russell. Below 138, I'm more neutral to, call it, pessimistic. I don't become a bear in the Russell here. I'm not a bear here until we start breaking this long-term 134, maybe 134.50, these lows here. If we start to break down from there, that would be my sort of risk-off signal. That would be my concern here in the Russell. If we come back down, if we roll over from these highs here, it's just back to neutral. It's back to this same chop that we've been in for 5 months, or whatever the case is, 4 or 5 months. So that's the way I look at it. If we can start to hold above 138 and move higher, I like it. I still think it can play catch-up to the rest of the market, to the rest of the broad averages, but it needs to prove it. So again, it's just at an inflection point, and I'm watching it pretty closely to sort of take my cues on how it moves. Next is FireEye. So FireEye here, you can see, has having a strong day today, 10%. I don't know what the news is, to be honest with you. Big volume, as we might expect. So the way I look at this one here is it's been crushed ever since 2015, and it's been potentially just carving out this bottoming wedge pattern here. And I like the move higher today. I think this 1180 area, call it 1150 to $12, that's an important kind of reference zone for FireEye. I think that kind of toggles you, to a more sort of optimistic, bullish view versus, the continued pessimistic slide. And it's just gapping up and challenging it right now. So this level, this 1150 to $12 zone, is approximately the February 2016 lows. We carved out some higher lows in May, undercut it in November, found a lot of resistance here just a few weeks ago in February. So there's a lot of emotional charge in this general area. And for me, for FireEye, for the bottom or a bottom to be put in, I would really like to see it just back above, call it 12. And then you have, of course, right above it, this trend line here. So I don't think, if you're calling for a big bottom here in FireEye, I don't think you need to really rush it. If this is going to be a bottom, if you get in at 1180 or you get in at 1220 or 1208, to me, those, and if you're trading for something back up to 20 or to 18, you might as well just wait for the confirmation, avoid all these headaches, and if you're playing for that bigger move, just wait for the confirmation, wait for it to get above some of these key levels, and I think you have plenty of, a fuel in the tank to get a big move if you want to call this as a reversal. So again, I'm just assuming that if you're playing more tactically, then of course, you got these little trend lines and these tighter levels to work with, but that's sort of my big picture view there on FireEye. Like the start today. Let's see if it can carry up some more momentum above $12. Next, NUE. Let's see. This is Nucor, I believe. Yeah, so this is Nucor. So again, I like this name. This is one, again, back to the monthly chart. You can see 55, 65, that general area. We broke above there back in November of 2016, and we've been basing and trying to get going again ever since. So nice kind of shorter base here on top of long-term resistance. I really like that. Anytime you get kind of a tighter range in here on top of a more significant level. And you can see we're coming back in. We popped up to 65, and now we're coming back to fill this gap and just kind of check back to some of these moving averages. Uptick in volume recently. I like this name. I would be interested on dips, dip like today for sure, as it comes back to these moving averages. And if you want to just wait for the pullback to sort of play itself out and play for a breakout, I think 65. I think looking for a trigger back above 65. I like it. Probably something I'm going to be looking at and potentially playing myself. I like the base here. I like the long-term structural pattern. I like the volume. And this is a name that kind of fits all bills. So I like it. Watching it, not doing anything with it today. But good setup. Good ask on that one. Tesla. So Tesla here is one that also is pretty interesting. Back to the monthly chart, you can see some pretty clear levels, 180 to 277, give or take. That's generally the broad sort of goalposts that we're looking at, and you can see we're trying to get back to the upper end of it after failing just last month to just explode above that 280 level. So we had the nice run up above or into resistance from the bottom end of the range to the top end. We pulled back about 20%, and now we're trying to figure out if we can go back up there and retest. So I think on a shorter term basis, the levels here are pretty clear. You got the lows at 244 from just last week, and then you have the big highs up here at 275, 280. So, and we're stuck just in between. There's momentum to the upside right now in the short term, intermediate term. Frankly, there's just general momentum and interest in this name recently, or short covering, whatever you want to call it. Regardless, it's demand, and I would not want to be betting against Tesla right here. I'd rather be looking glass half full, be looking for entries into Tesla. So got a 2 or 3 day pullback now. Maybe let these moving averages catch up. Maybe put in a higher low at 250 to 255, and then we can kind of stair step our way back up to retest the highs. But I like it. Again, I really wouldn't want to be betting against it here. I think if you start to lose 240, maybe you have more reason to. Maybe it comes back down here if you're trying to play it tactically on the short side, back to retest these lows. So, but for me, I would just much rather be playing it on the long side. So that's Tesla. And finally, Shopify. So this one, I mean, it's just been an absolute monster here. Let's look at the monthly chart. You can see up, let's see, we had a 19% January, we had a 17% February, and we're up 16% in March so far. So we're up almost 50% in 3 months, 40 to 50%. Back here was a trigger entry for us. This was a long that we got into around here. I don't know where we scaled out of it, but it certainly was not capturing the bulk of this move on where it is now. So regardless, Shopify, again, bullish structurally. It's something I want to own, but it's something I would not own up here. I would just be waiting for more of a pullback. Monthly chart, weekly chart. Depends on how you want to look at it and how tight and aggressive you want to be trying to buy this up. But it's in motion. It's moving. It's working. This is a name, again, I would want to have a piece in and to be positioned long in. From that point, it's really just going to matter on you know, how bad you want it. You know, you start to have some of these longer term or some of these bigger levels here right around $60 or $59. You have a recent little pivot down here. You can use moving averages, but I'd be looking for a pullback and using that as an opportunity to position long. So hopefully that helps. Hopefully this video has helped in general for all the names that we covered. Don't forget the webinar tomorrow. You can head to the traderisk.com/webinar. There's going to be a lot more information there, and I think that's it. So have a great rest of the day, and thanks for watching.